STYLAM Industries Limited, a story of growing exports but losing out on competitive edge. Operating for over 3 decades, three major segments: high pressure laminates used as decorative laminates in furniture, tabletops, etc. Compact laminates used in chemical resistant applications like restrooms, and exclusive surfaces for enhanced functionality for interiors. Major component of revenue is exports, growing year after year, focused on Europe and Southeast Asia. Overall revenue is not showing as much growth as that of exports. The reason being the domestic laminates market not being supportive, quite fragmented, with a vast majority of unorganized players, and fall in the domestic market is a matter of concern. A capacity utilization of over 80% supports the strong installed capacity. The company enjoys operating leverage benefits. It's also planning for thicker laminate sheets which are in strong demand overseas, hence setting up a new plant in Haryana. In terms of capital expenditure, FY25 stands out with a massive outlay of over 100 crores for the new plant being set up in Haryana, supported by huge cash flow from operations. The plant capacity will be 4.8 million sheets, and on implementation, the company will have a big boost to its export earnings. Strong internal accruals, minimal payouts has prompted the company to go for plowback. Growing proportion of equity in funding the balance sheet has moved up to a level beyond 80%, and the company is absolutely debt free and is able to generate justifiable return on equity of over 20%. Rising generations from operations, minimum payout and nominal capital expenditure has helped the company fund its current assets from the operational surplus. As a result, the surplus of current assets over total liabilities is to the extent of almost 75% of current assets. That speaks for the exceptional liquidity enjoyed by the company for growth opportunities. In terms of production efficiency, the company has an advantage of operating over 3 decades. The recent anti-dumping duty imposition by the government is a strong positive against cheaper domestic supplies from China and Korea. The company has an order pipeline visibility which is enabling it to work on restoring margins to their original levels. In terms of profits and profitability, the picture in FY25 was an anticlimax as compared to FY24. FY24 had a rising profitability and volume of profits quarter after quarter on a TTM basis. The picture totally changed when it came to FY25 with a fall in profitability persistently quarter after quarter, leading to lower lows. And the most concerning thing was, while the previous year profit went up in terms of volume, current year saw a dip over previous year. Input prices, product mix demands, and company's inability to pass on cost escalations devastated the financial performance. Profit growth led revenue growth in previous years, but FY25 saw profits trailing behind revenue growth. For the first time, the company's vulnerability to risk has been exposed. FY25 H2 poor performance has cost dearly to STYLAM Industries where it is rewarded a PE much below the average of its peers at a poor 22.6, losing out almost 40% of its peak valuation of October 2024. Unless there are firm signs of recovery in revenue and profitability, the valuation might continue at the current level. Companies' over-reliance on export market, exposing it to higher foreign exchange risk and risk from global economic and political situation. The company's local sales also facing resistance from aggressive local players. Working capital buildup in inventory and receivables is also another concern. Comparing the holding of various stakeholders between 31st March 2024 and 31st March 2025, there is a small dilution in respect of promoter family, institutions, mutual funds and FPIs continuing their support at the existing levels in aggregate is very positive. Retail being a major component is noteworthy, but promoter holding is literally a family holding running the succession risk, and in the background of aborted stake sale to a Japanese company in FY24, there are concerns on the long-term commitment of the promoter family for future business prospects. On a 2-year timeline, the share has not been rewarding enough in spite of exceptional peak of October 2024. The rise was meteoric and the fall catastrophic. The daily chart has formed a triangle with a peak in October, having a bearish cross cutting across 200 EMA in February, falling further and having a sideways movement for over 4 months now. The directionless movement might continue before any up move, as has been unique to the share in earlier years. As of now, with a Fibonacci retracement level of 14.7, the share is in a zone which is not prone to any extraordinary momentum. The share price movement for over 4 years, from 28th August 2020 till 18th February 25, highlights its movement well above 200 EMA, and the bearish cross registered on 18th February 25 makes its recovery more challenging as it has firmly entered the bearish zone. Unless the expanded capacity is able to register a great improvement in both domestic and export sales accompanied by higher profits with profitability, the share price might take longer than expected to change the direction. Export orientation in operation and capacity addition has been the core strength of STYLAM Industries. Debt-free status, strong liquidity for organic and inorganic growth are a reflection of its prudent financial management. Market fears persist on the shock underperformance of H2 of FY25 from margin erosion and fall in domestic sales. Hope you found this video on STYLAM Industries to your liking. I am Vittal Prabhu with the fortnightly video. You may access similar videos with a rich content at our info card. We look forward to your valuable feedback. If you are new to the channel, may please subscribe and press the bell icon for timely intimation on our forthcoming videos. For your valuable time and kind support, highly obliged. This video is for purposes of information, education and awareness only. This is not meant to be a solicitation or recommendation to buy, sell or hold securities. Wherever applicable, please seek the advice of a competent professional before taking action of any kind.